We are starting the next chapter, that is again in this volume number 3. Chapter 1 we are going to discuss, that is financial statements of a company. Already you have learned the financial statements. Which are the financial statements of a company? We have this P&L account and the balance sheet, and in this textbook we are discussing the new format, and you all know the new format, isn't it? The vertical format, everything comes on the left side. In the balance sheet, the liabilities and assets will be written on the left side. Similarly, the P&L new format also we discussed in previous videos. That statement of P&L where we have revenue from operations, other incomes and expenses section, everything appearing on the left side. I mean the vertical format we learned for P&L and the balance sheet. The same thing we will be taking in this chapter also. So the actual format of balance sheet, the format that we learned in the beginning. In the beginning means when we learned that accounting ratios, that time itself we learned the format of balance sheet. That is from this chapter actually. It is given on page number 1.5. So all of you just take that page now. You need to revise that balance sheet format again. Always this format must be there in your mind for doing that accounting ratios chapter. Then for this chapter also it is very much important. I mean that format is very much important. Now about the chapter, it's very small chapter, very easy chapter. Then what you will get from this chapter is, the question for the board exam will be like to write the subheads and major heads of items in the balance sheet. Suppose they are asking you what is the subhead and major head of bank loan. So just look into the balance sheet now. Under which subhead and major head you will write the bank loan. Bank loan will come under long term borrowings, isn't it? And long term borrowings are coming under non-current liabilities. So subhead will be long term borrowings, the major head will be non-current liabilities. These type of questions you will be getting from this chapter. Only these type of questions. Okay. So it's easy for you to score marks. Normally they will ask you for 4 marks. 4 items will be given, 4 or 8 items will be given. And it is easy because it's not time consuming. You don't have to do any calculations. If you know that format very clearly, you can easily write the subheads and major heads. So we'll just revise the balance sheet format. The first section, you know, it is equity and liabilities. Below that, we have 3 major heads. Okay, equity and liabilities, we can't call it as a major head. That is just the classification, or that shows the heading of liabilities, that shows the classification of liabilities. So under that 3 major heads we have shareholders fund, non-current liabilities, current liabilities, the main heads. Other than that, there is a heading like share application, money pending allotment. Even if you don't go through that section, it's okay. You need to remember shareholders fund, non-current liabilities and current liabilities. Okay. Then under assets section we have non-current assets and current assets. So all these you know. Then again under shareholders fund we have share capital, reserves and surplus, that you have learnt before. Then actual format we have one more item like money received against share warrants. This won't be coming for the exam, like they won't ask you what is money received against share warrants and all. Normally they will not ask. But in case if they ask like write the subheads under shareholders fund, for 1 mark if you get a question like that, what should be your answer? The subheads under shareholders fund you have to write share capital, reserves and surplus, and the third item also you are supposed to write, that is money received against share warrants. Only for such questions you will have to write that particular item. Other than that you don't have to go into detail. And basically share warrants means if you are the holder of share warrants means they are the instruments or financial instruments which can be converted into equity shares at a specified date and at a specified price or rate. Okay. So that is the meaning of share warrants. So what is the advantage? When it can be converted into equity shares, you can become the holder can become the owner of the company, because equity shareholders are the owners of the company. Okay, so that's the advantage. I just gave you the meaning. what you have to learn is just that heading. In case if they ask like which are the subheads under shareholders fund. Then next one is share application money pending allotment. That means you got the application money, but the allotment is still pending. Then the next one is what you have to learn in detail, non-current liabilities section. Below that we have long-term borrowings, deferred tax liabilities that you can skip, then other long-term liabilities, long-term provisions. So these three you must remember: long-term borrowings, long-term provisions, other long-term liabilities. Then similarly under current liabilities we have short-term borrowings, trade payables, other current liabilities, short-term provisions. Okay, so these items you must remember. You don't have to by heart. Again I am telling you, no need to by heart, but you must be familiar with these. Okay. Then asset section under non-current assets, it's again divided into fixed assets, non-current investments, deferred tax assets you can skip, long-term loans and advances, other non-current assets. Then we have current assets. Okay, fixed assets again divided into 4: tangible, intangible, capital work in progress, then intangible assets under development. Okay, what is tangible, intangible you all know. What is capital work in progress? Capital work in progress means the tangible fixed assets which are in progress, like building under construction. That will be written under the subhead capital work in progress, and the major head will be non-current assets. Understood? Then intangible assets under development means intangible assets which are in progress. Okay, any intangible assets, it can be copyright, patents, trademarks, any intangible asset or software which are under development, that will come under that fourth subhead, intangible assets under development. Okay, then under current assets we have current investments, then inventories, trade receivables, cash and cash equivalents, short-term loans and advances, other current assets. What all will come under cash and cash equivalents? That you have learned in cash flow statement chapter. Cash and cash equivalents will include cash in hand, cash at bank, then short-term deposits, current investments and marketable securities. Okay, so these 5 items will be coming under cash and cash equivalents. Yes, so that is the basic format of the balance sheet. Now just take page number 1.18. You should know the examples of each subhead. You should know means again don't by heart, just read. You have to be familiar with these terms, that's all, so that you can easily identify the subhead and major head, and the format of balance sheet must be there in your mind always. Did you see that section, non-current liabilities, page number 1.18? Under non-current liabilities we know the subheads and all. Then under long-term borrowings, did you see that subhead A, that long-term borrowings, 5 items they have mentioned, 5 examples like debentures, just tick it. You have to just read those items. I mean under long-term borrowings you should be familiar with these, like we have debentures, bonds, then long-term loans, public deposits, then other loans and advances which we are taking. If we are giving something, that will become an asset. This is the loans and advance which we are taking. Okay, so all these you must remember. The examples you read 2 or 3 times, so easily you can remember all these items. Okay. Then we have deferred tax liabilities. You need not, you just read, that's enough. Nothing will be asked from that portion usually. Okay. Other long-term liabilities, did you see 2 examples given? Just put tick marks against those 2. That's what you have to remember under other long-term liabilities. The examples you must remember, like premium payable on redemption of debentures. Then we have premium payable on redemption of preference shares. This premium on redemption of debentures we discussed in that chapter, debentures. So what is the subhead of premium on redemption of debentures or preference shares? Subhead is other long-term liabilities, and the major head will be non-current liabilities. Okay. Then we have long term provisions. Examples of long term provisions given as the last sentence of that paragraph, you just mark that sentence. Even if you do not read the entire paragraph, just go through these examples. That is provision for gratuity. Did you see that? A provision for gratuity, that is long term provision. Now, what do you mean by gratuity? At least you would have heard somewhere. Gratuity means it is the amount paid to an employee, usually at the time of his retirement. Okay, so that is gratuity. Then we have provision for earned leave and provision for warranty. Okay, you will be having earned leave means an employee will be having a fixed number of leaves. So out of it, suppose he is having 50 leaves, out of that he took 30 leaves. Okay, then he can encash the rest 20 leaves. Encashment means he can get amount for the leaves which he has not taken. The rest 20 leaves he can encash. So that is called provision for that the company is keeping a provision, setting aside an amount, that is called provision for earned leave. Okay, so these three examples you must remember under long term provision. A provision for warranty also coming under long term provisions. Okay, then current liabilities, the examples you must be thorough, then only you can remember the subheads and major heads. Current liabilities, the subheads, you know, short term borrowings, trade payables that we referred in the balance sheet. Now under short term borrowings, did you see those examples that you must read? Loans repayable on demand. Loans usually will be long term, but on demand means whenever they ask you for the payment, you will have to pay the amount. That is called on demand. That means it is current, the subhead is short term borrowing, the major head will be current liability. Then bank OD, that is again short term borrowing, bank overdraft or cash credit. Loans from other parties which is repayable within 12 months, if they specify like this, or else loans are long term borrowings. Then deposits, again public deposits are long term borrowings. If nothing is mentioned, public deposits you take as long term. If they specify like within 12 months and all, you take as short term. Then other loans and advances, again within 12 months. Trade payables, you know already the items under trade payables. One is bills payable, one is creditor. Okay, then take the next page. Other current liabilities. You can learn all these examples from textbook itself, but you should read it 3 or 4 times, then only you will be familiar with this. Okay, if you read once, you can't remember all these items. So other current liabilities, we have current maturities of long term debts. Did you see 1.22 page? Current maturities of long term debts. Like we know bank loan is a long term borrowing. Normally it is a long term borrowing. That means we will pay this amount back only after a period of 1 year. But out of, suppose you have taken a bank loan of rupees 10 lakhs and you will repay this 10 lakhs only after 5 years. But out of that 10 lakhs, 1 lakh rupees you are paying in the first year, suppose. Okay, suppose 1 lakh you are planning to pay the first year. That 1 lakh will be termed as current maturity of long term debt. Entire 10 lakhs that will come under long term borrowings, but out of that what we pay this year, that means it is payable within 12 months. That will come under this subhead, that is current maturity of long term debt. And so the subhead for this particular item will be other current liabilities and the major head is current liability. Okay, rarely only you will be getting this item. Next item usually you will get that interest accrued but not due on borrowings. It has not become due, but it is something payable and it is coming under other current liabilities. Then similarly we have the third item, that is also usually asked, interest accrued and due on borrowings. Not due and due, both will come under the subhead other current liabilities. Then you have income received in advance. Then unpaid dividends. Unpaid dividends means they are unclaimed dividends by the shareholders. It is declared by the shareholders. Shareholders approved the payment of dividend, but it has not claimed by the shareholders. Understood? Shareholders are not making a claim against this. Then we have calls in advance. Did you see calls in advance there? The other in between we have like unpaid mature deposits, all those you just read, normally it's not asked. Unpaid dividends or unclaimed dividends, we'll have to write this. Okay, calls in advance. Then we have employee state insurance, other payable items like employee state insurance, provident fund payable, outstanding expenses. So all these items will come under this other current liabilities. Okay. Then we have short term provisions. Short term provisions include provision for expenses, provision for tax, provision for employee benefits. Employee benefits means wages, salary, etc. These are provision for employee benefits, that is short term, but it can be taken as long term also, that I will explain in one question. Then we have provision for tax and other provisions. Okay, so that is the end of liability section. I'll just explain the asset section also. Asset section, we already discussed the major heads like non-current assets and current assets, below which we have some subheads. Then under long-term loans and advances, just take page number 1.30. Long-term loans and advances, you have capital advances, security deposits, other loans and advances, and yes, only 3 items under long-term loans and advances. That means what we are giving to other firms. So it's receivable, it is an asset for us, it is coming under non-current assets. One is capital advance, meaning is the advance amount you paid when you purchase fixed assets. Okay. Then we have security deposits. Security deposits means deposits you made for getting electricity connection. Usually you will have to pay some advance amount when you have to get electricity connection or telephone connection. So that's called security deposit. It's an advance amount which you are paying. So it's coming under long-term loans and advances. Then other loans and advances, the last sentence you can read the examples. Long-term loans to employees, loans or advances you are giving to your suppliers, that will come under other loans and advances. Okay, then under current assets, the next page, did you see like current investments, all those we discussed. Current investments, inventories include raw materials, work in progress, finished goods, loose tools, stores and spares. So all these will come under inventory. All these examples you must read. Then trade receivables, we have bills receivable and debtors, that you know already. Then cash and cash equivalents we learned, we have discussed before. Then F 1.32, F, the last section, did you see other current assets, and that includes prepaid expense. So if you get an item like prepaid expense, subhead is other current asset, major head is current asset. Accrued incomes, dividend receivable, advance, taxes. Okay, so all these are other current assets. So problems I'll do in the next video. First what you have to do is go through these examples. Repeat it 2-3 times, then only you can remember this. Then make sure you learn that format of balance sheet very clearly.